Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website DollarCollapse.com. Welcome back to the show, John.
Hey, Jim. Good to be back.
John, a real simple question to start the interview. Has inflation peaked?
I'll give you a simple answer. Yes, it has. That monster inflation report that we just got in the U.S. this morning was, of course, from a month ago, because that's how the calculations work. And since that time, commodities have basically plummeted. I have a few just sketched out in my notes in front of me, but lumber's down 58%, nickel's down 54%, aluminum 37%, oil peaked at almost $130 a barrel, U.S. dollars, and it's down into the 90s right now. So we've seen a lot of major components of previous inflation reports turned down pretty big now. Meanwhile, houses in the U.S. at least, are starting to roll over. That was a mini bubble there, almost as serious as the real estate bubble of the previous decade. And it's having a lot of the same effects on market participants. People can't afford to buy houses anymore with higher mortgage rates and incredibly high house prices. So they're not. So existing current sellers are having to cut their asking prices. So we're seeing a decline in housing prices on top of all these industrial commodities. So I think inflation will be dramatically slower in the next few months, of course, with all the pain that implies.
The Bank of Canada just hiked its trend-setting rate by a full percentage point. Do you think that's possible when the Fed holds its next meeting?
They're talking about it now after this inflation report that we got today. There's speculation that we'll do 100 basis point increase in the Fed funds rate here, just like the Bank of Canada did. It's technically possible that they would do that, but I think it might just break the global financial system because already, the world is in chaos right now with only modest central bank tightening. I mean, the Fed funds rate in the U.S. is what? Like 2% or less still right now? Which means short-term interest rates in the U.S. are negative 6 to 8% right now. That's incredibly loose monetary policy, incredibly easy money. And yet you've got global chaos because of inflation and or tightening monetary conditions. So I don't know how much more we could do without breaking the global financial system.
Sri Lanka, food riots, fuel riots, they've occupied the seat of government. If inflation isn't brought under control and the world supply chain problems solved, could you see this elsewhere? Oh, yeah, there are food riots and or energy riots all over the world right now. The list of countries that are having some kind of civil unrest relating to financial conditions is like 25 countries long. And it isn't just limited to the emerging markets. The Dutch farmers are kind of making like the Freedom Convoy in Canada here. They're shutting down big parts of the Netherlands. Germany's got kind of the same thing going on, and Mario Draghi, the prime minister, I guess it is, of Italy, just had to resign, and the Macron, the guy in charge of France, just got slapped down big time in a legislative vote in which he wanted to impose vaccine passports on the country, and parties of the right and the left came together and voted no, and so he has no power either. So we're seeing various kinds of regime change out there in the world right now because the world has become ungovernable. We've borrowed incredible amounts of money that we can never hope to pay back. We're inflating our way out of that mountain of debt, and that inflation is causing chaos pretty much wherever you look. So it's not just banana republics. It's Germany now, and the Netherlands, and France, and the U.S. We're having trouble everywhere in the world. And you can trace it all back to the stupid policy mistakes, especially monetary policy, of the past 30 or 40 years. And because these problems have been so long in the making, there is no solution. There's no Fed funds rate that gets us out of this, no marginal tax rate, no new immigration policy. There's nothing you can do to save us from the consequences of our past mistakes.
Do you think the Fed's next rate hike will be the last?
Very possibly. I mean, assuming they even do another rate hike. As chaotic as the world is right now, remember, we're already in worse shape than usual for when the Fed capitulates from an attempt at tightening and goes back to easing. And the only reason they aren't capitulating already is because inflation is so high, they feel like they have to lean against that inflation and be perceived to be addressing it to keep it from running out of control. But I would argue that monetary policy around the world has already tightened dramatically. Interest rates are way up from where they were when they were negative in a lot of parts of the world. Central banks are already starting, at least a few central banks are already starting to pull money out of the system via quantitative tightening. And the financial markets are generally behaving as if they're worried. Stock prices are way down, the bond market's unhealthy and everything, and that tends to suck liquidity out of the market too. So we're already seeing a dramatic monetary tightening, for which another 100 basis points on the Fed funds rate will not make much difference. So I think it's completely possible that the Fed capitulates pretty soon here. A lot of it depends on what the stock market does, of course. If stocks tank from here, that brings the capitulation further up towards the present in time. But if stocks behave pretty well, like people aren't too worried, then that lengthens the time in which the Fed is going to have to continue to tighten.
The euro and yen are cratering. Why is this happening, and what does it mean? For example, the euro is now at par with the U.S. dollar. That hasn't happened in the last 20 years.
Well, what that means is that those guys are making even bigger mistakes than we are here in the U.S. And what's happening for them, you see, normally when a currency goes down in value, that's good for your exporters. It actually gives you an advantage in trade because the stuff that is priced in your cheaper currency is cheaper on the global market. You sell more stuff, then you get healthier economically. But what's happening now is crashing currencies in the Eurozone and Japan are very inflationary because those guys import an awful lot of what they use. And that stuff becomes more expensive, which increases inflation in their country, which makes their currencies even weaker. And so they're looking at kind of a death spiral where they've borrowed so much money in the past that the inflation that's inevitably resulting from all that debt is unmanageable, because if they raise interest rates, the cost of all the debt that they're carrying goes through the roof and they go bankrupt. But if they don't raise interest rates, then in other words, if they continue with very easy monetary policy in the face of rising inflation, their currencies will crash, inflation will spike, and they'll blow up that way. So it's not clear how Europe and Japan get out of this. Although, having said that, they have two very different situations, because Europe is basically a conglomeration of different countries that have historically had their own currencies, and they continue to have their own fiscal policies domestically. So some of them are doing reasonably well and some of them are doing terribly. You look at Italy, they're a catastrophe. And if they have to pay normal interest rates on the money that they borrow, they're bankrupt. It's just over for them, and they will have to leave the Eurozone, along with some of the other countries that are in almost as bad a shape, which means the euro itself might just cease to exist, because all the different countries that are in the monetary union right now will just leave. Japan, meanwhile, is just one country with one currency, but it's also the most indebted government on a per capita basis in the history of the human race. And its population is shrinking, so they can't hope that a big younger generation will come along and work and pay taxes and bail them out of their fathers and grandfathers' debt. They're just basically stuck with their situation, and the yen is collapsing. You know, it not so long ago, it cost about 100 yen to buy a dollar. Now we're up to like 137, which is in currency terms a massive depreciation of the yen, and it doesn't seem to be ending at all because we got the U.S. threatening another 100 basis point increase in our interest rates here, which makes dollars relatively attractive to something like the yen, where they are not raising interest rates. So those two systems, the eurozone and Japan, could either one or both together be the epicenter of the next financial crisis. Of course, there's a lot of other candidates, but those two definitely bear watching.
I was going to say maybe the good news for Japan is everybody there is too old to riot.
You know, it is amazing what's happening demographically in a lot of countries, and Japan is sort of the poster child for that. They just basically stopped having babies a couple of decades ago, and their population is, or their birth rate is so far below replacement rate now that their population is just contracting at a really dramatic rate. And on the one hand, that's good in the sense that it relieves the pressure of overpopulation on your land mass. On the other hand, it means that there aren't any young people to work and pay taxes to support all the old people that can no longer work, and your finances basically are destroyed by that imbalance. And that's where Japan is now. You know, any country that has a low birth rate can solve that problem by letting in more people from other countries. In other words, you use immigration to bring your demographics back into balance, but that destabilizes your culture in a lot of cases. That's what happened with Europe. And Japan just doesn't really want to let in another 50 million people from other countries. It's just contrary to their cultural heritage. And so there aren't a lot of obvious solutions to their problem. And I think it's going to end with massive devaluation of the currencies. You know, that's something that they'll try, of both the euro and the yen. But of course, that kind of thing doesn't work, really, for reasons it might take too long to go over it now, but it's just not a solution in this kind of a world. And even if it is a solution, it impoverishes all your savers if you do that. So you get massive civil unrest, which maybe your finances are in better shape later on, but the government that imposed those policies is long gone because everybody threw them out of office. So, it's a mess. There is no obvious solution to any of this.
We'll have more with John Rubino right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Rubino. John, Germany's looking at a serious energy shortage because they rely on natural gas from Russia. How will that impact the rest of Europe?
Well, you know, so far we've just been talking about monetary policy and the massive mistakes we've made in the past. But on energy policy, a lot of countries are even stupider than they are on monetary policy. And Germany is a perfect example of that. Now, here's what Germany did. Maybe starting, let's say 20 years ago, I'm not sure of the exact time frame, but sometime in the past couple of decades, they decided they wanted to go very green with their energy policy, which is, that's a laudable goal. So they built a lot of windmills and solar farms and things like that, and they contracted with Russia to import lots of natural gas, because natural gas is relatively clean burning compared to coal and oil. So they set themselves up with domestic renewables and natural gas piped in from Russia. so far so good. As long as the natural gas keeps flowing, they're in pretty good shape because they have lots of cheap energy. But at the same time, they picked this big fight with Russia by expanding NATO right to Russia's borders. Even though Russia was saying, we need defensible borders. This is an act of war if you put a hostile military alliance right next to us here, which is pretty reasonable. No matter what you think of Putin, defensible borders are a very reasonable foreign policy goal. And so, okay, war starts over there. And then the U.S. and Germany levy a bunch of sanctions on Russia, including on their energy exports, not realizing that Germany desperately needs those energy imports. And now Russia is on the verge of cutting off all that gas that Germany depends on. And it's not clear how Germany heats their houses this winter. And they're already starting to have to shut down parts of the economy because they don't have the natural gas to run them. What they're doing, one of the things that would be funny, except that it involves a lot of suffering, is they're setting up warming stations, which are like, you take over a gymnasium, put a bunch of cubbies with a heater in there, and so if people can't heat their apartments and it's too cold and they're going to freeze to death, they can come down to the warming station, heat up for a couple of hours, and then go back home. That's how desperate the Germans are now for power. And it was all completely avoidable. None of this had to happen, but it is happening.
Well, Germany was warned by Canada and the U.S. not to rely on Russian natural gas. Why not get it from two countries that are reliable suppliers and go along with contracts, or actually believe in the rule of law when it comes to at least contracts for the most part? And yet Germany just shrugged and went, well, they won't cut us off. But Russia has demonstrated a history of cutting off natural gas customers in the past. Why would they stop doing it now?
Yeah, they have a history of using their exports as a weapon. And but even so, it could have been avoided via foreign policy. If we just didn't expand NATO to the border, then Russia wouldn't have had an excuse. They still might have manipulated European politics via this power that they have over Europe, but
well, I don't buy the nuke excuse at all, because everybody's got ballistic submarines off each other's coast. So in actual fact, right now, probably off the coast of LA and Vancouver, there's a couple of Russian and Chinese subs cruising around with 24, 30 nuclear armed missiles on it. So it doesn't matter if they're next door. So what? It takes 25 minutes for the missile to get here instead of 10. I don't think that makes much difference when you look at reality.
Here's the issue. Russia has been invaded over and over again, and they're very easy to invade because once you get past some border issues, some geographic barriers, it's flat. You can just keep on going until you hit Moscow, and that has happened to them over and over again historically. So they're not worried about a nuclear attack. They're worried about a conventional army, which, Germany's done it twice in the past century. France did it in the previous century, just, pouring in from Europe and invading them. And based on their history, that's a legitimate fear. But yeah, now it takes us to the point where Russia feels like it may not have any option other than going nuclear. And so we've taken what was kind of a thorny geopolitical issue with NATO expanding or not expanding or whatever, and we've turned it into a potential nuclear war here. And that's terrifying because, clearly Russia wouldn't win a conventional fight with NATO. And they know it. And yet we're over there financing and arming the country that is right on their border that they're trying to prevent from becoming a NATO member. I don't know. It's an incredibly dangerous situation that really didn't have to happen. And as the father of two sons that are, at about the right age to be drafted in some kind of a war if it happens, I'm terrified of this. I hate the idea of a conventional war over in some faraway place where it really doesn't matter to us. But if that escalates, it's absolutely terrifying. And none of it needed to happen.
Yeah. So and now we have Russia's deputy foreign minister pointing out, well, Alaska used to belong to Russia, and Russia likes to reacquire former territories. How would Americans feel if Alaska's next on the list after Ukraine?
He was joking. He was joking with that. I think
I don't think Russians joke. I don't think they know what a sense of humor is. Their idea of a joke is a cruise missile in your in your bedroom. Oh, look at this.
Russians are very funny people, but the Ukraine thing is, I think, analogous to the Cuban Missile Crisis for the U.S. back in the 1960s. Russia tried to put missiles right next to us, and we said, nope, we'll fight World War III over that. And, it ended up getting worked out, but barely. A lot of John F. Kennedy's advisors wanted us to sink the Russian battleships that were over by Cuba, and who knows what would have happened. And so, you can compare Russia's attitude about Ukraine to our attitude about Cuba back in the day. And
Ukraine did give up their nuclear weapons in the 90s with a promise from both the U.S. and Russia that their security would be secured, and now they have found out what life is like without nukes.
Well, back when the Soviet Union fell, we made a promise to Russia that we would not expand NATO any further than it had already expanded.
So it is a whole brand new world here with I was going to say new rules, but apparently the new rules are like Australian rules football. No rules.
Yeah. So we basically did whatever we wanted, assuming that we could get away with it. And, hopefully, because this could all be solved by tomorrow. Maybe this whole thing ends where they just announce, okay, Russia's going to pull out its troops, and the Ukraine is promising not to join NATO, and that's the end of the war. It would be a very easy thing to end. But it looks like everybody's so dug in right now that they can't bring themselves to that kind of a compromise. And I think you got to blame the U.S. for this. We're not always the good guys anymore in the world, and I know a lot of people will laugh about me implying that we once were the good guys in the world, but now it sounds like it's the Biden administration telling Ukraine not to negotiate, and Germany's going to pay a price for that, and
we're all paying a price for that.
Yeah.
We're all paying a price for it.
Yeah.
Here in Vancouver, we were paying $2.50 a liter for gasoline. Multiply that by 4, that would be a U.S. gallon. $10 a gallon gas. It's not cheap.
No, that's brutal for people who have a long commute. I know a lot, people who work online, like you and I, we don't really feel that the way that normal people do. But if you've got to, fill your tank a couple of times a week to get back and forth to work, and gas doubles, then, all of a sudden there's some other bill you can't pay, or you can't put food on your table.
Gold and silver are down along with stocks and cryptos. Is this a replay of 2008 and 2020 when everything fell at the same time? And if so, when should we expect the bottom?
The when is the big question, because this does feel a lot like 2008 when stocks tanked and gold and silver tanked just as much, and then early 2020 when the pandemic hit, same thing happened. In both cases, that was a V bottom for gold and silver. They bounced off the bottom and then just took off on nice long runs after that. This will probably be similar to that, except that we don't know where the Fed is going to capitulate this time around. Because like I said earlier, they've got this inflation thing to worry about now that they didn't have in the past. So I think they feel like they have to be a lot more serious about this, and they have to accept more pain in the financial markets than they did previously. The problem is, it's definitely a problem. They don't know how much pain becomes irrevocable in the financial markets. In other words, how far can stocks and bonds and houses fall before they set off a chain reaction and the whole system blows up? So that's the thing the Fed is dealing with right now. They can't start cutting rates in the face of double-digit inflation, but they also can't just accept an unlimited decline in financial asset prices, because the financial or the leverage speculating community will just blow up. and that would take down the rest of the economy. So they want to capitulate. They want to turn back around and start easing again. They know they can't do it just yet, and they need some really serious data. And I think they're going to get some pretty soon because, as I mentioned earlier, a lot of the components of our inflation measures in the U.S. have turned around and started to fall pretty hard lately. So we're going to get some surprisingly low inflation numbers in the not too distant future. And if you combine inflation dropping from 9% to 3% and the stock market falling another 10 or 15 or 20% from here, and that would probably do it for the Fed. So give us those conditions, and let the Fed stop tightening and start easing, and then gold and silver will just take off like a rocket. Because what we'll infer from that, what the markets will infer, is that the Fed can never really tighten again. And we just can never do it because look what happens when they even tighten a little bit. So we're going to accept higher rates of inflation in the future by implication in order to prevent a gigantic financial crisis. And that's a great environment for precious metals because that means that the dollar is going to get less and less valuable year after year. So you might as well own forms of money that have limited supplies and because of that are not going to decline in value along with the fiat currencies of the world and therefore will rise in price relative to fiat currencies. So, that'll be the gold and silver story for the next few years, or maybe the next few decades, however this plays out. But we kind of need to call that bottom, and that's the tricky part, because it could be today, or it could be a lot lower from here 6 months from now, and we can't know that. So it's not as easily tradable as it would be if that Fed capitulation was right there on the horizon. But I still think, the same advice that most people in the gold and silver space have been giving for the last 20 years still applies. Dollar cost average. Don't jump with both feet into precious metals, but don't shy away from them either. Just buy the same amount each month of gold and silver mining stocks, really high quality ones, or gold and silver bullion. Have some coins shipped to your door and save them in a very safe place. And then do the same thing next month with the same amount of currency. And don't worry about these squiggles, when gold and silver are down, the dollars that you're putting into them will buy more ounces. And when gold and silver go up, those dollars will buy fewer ounces. So your average price will be fine. You'll be happy with it in the end. And you won't stress out by trying to trade this market and time it just right.
Cost averaging, in other words.
Yeah. Basically, it's it's a hard investment strategy because it takes a lot of the emotion out of it, and it's very hard not to be emotional about this stuff, and want to make a big move because this thing is happening right now. You can't really tell if a big thing's happening right now. You just can't. So the much more intelligent way to approach long-term accumulation of assets is just to do it a little bit at a time and make that your rule so that you don't, it's way less stressful if you're operating with a rule than if you're operating on your judgment at any given time.
John, thank you so much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble. He founded the website dollarcollapse.com. He was speaking to us from Washington State near Port Angeles. If you have any questions for John or any of our other guests, you can send them to info@howstreet.com and we'll ask that question for you. Our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.